Joining me now on volatility in the markets and what is driving that volatility and the pressure on prices. That's a nice way to say. It's lost 1,800 points, for crying out loud. Euro Pacific CEO, Chief Global Strategist Peter Schiff joins us, author of the book How an Economy Grows and Why it Crashes. Half of that is timely. And with us, Stephen Lieb, chairman of the Lieb Group, author of the book Game Over, How You Can Prosper in a Shattered Economy. Unfortunately, both of you have selected very relevant titles. Let me start with you, Steve, very quickly. What's causing all of this? And are we near an end?
Well, Lou, short term...
You can interpret that any way you like.
We are near an end. I mean, unfortunately, longer term, definitely near an end, unfortunately, unless we wake up quickly. Short term, I think there's reason for hope. I think that the market is close to a bottom. I think that the lower oil prices will help out. I think that Bernanke saying he's not going to raise interest rates for a couple of years is going to maybe incentivize a few more people to buy houses, take out those variable rate mortgages, which we all know led to disaster. It will have some short-term effect. I think we're near a bottom. Long-term, get set for more of the same, maybe on steroids. I mean, this is not going away, Lou, until we get the message of growth across.
Peter Schiff.
Well, I think what we're experiencing right now, Lou, is the hangover from the last round of monetary stimulus. Unfortunately, rather than learning from its past mistakes, the Fed is repeating them. They're going to keep interest rates at zero. And the biggest problem facing the U.S. economy is that rates are too low. Low interest rates or 0% interest rates is causing severe structural imbalances in our economy. Resources, land, labor, and capital are misallocated. The market needs to reallocate them where they need to be, but the Fed won't let that happen because the reallocation is going to be a painful process. And the politicians have no stomach for the pain. So, rather than letting the economy check into rehab, they're shooting it up with more drugs, and we're going to overdose.
All right, Lou Lehrman, in talking with him earlier in this broadcast, analyzing what is happening in the international banking system as well as what is happening in these markets, he is saying we have got to be sufficiently mature to return to, over time, the gold standard, stabilize.
We're already doing it. The markets are taking care of that, Lou. Gold is right now the de facto reserve currency. The dollar's not. The euro's certainly not. Gold is, the markets have already taken care of it. Gold at $1,800? Come on. Well, that is now the reserve currency in the world today.
I own gold, you own gold. Not that many other people do yet. I mean, central banks are just starting to buy it, but the world is still trying to preserve the dollar standard. Look what the Bank of China is doing. Look at the Bank of Japan. This is the problem, and it's so ironic that
Peter,
the S&P...
I agree with you.
Let me finish this one point. Okay. S&P downgrades U.S. Treasuries, and what happens? The world has to buy the treasuries despite the fact that they were downgraded to stop the dollar from imploding.
Look, what
well, can the three of us agree that the S&P downgrade is immaterial to this discussion?
No, it's not quite. It's almost immaterial. I mean, S&P downgrading is laughable beyond belief, okay?
Well,
I mean, who are these people to downgrade anybody other than themselves?
Okay,
let
me attack it this way then. Do you think that if S&P had not downgraded U.S. debt, that we would have seen any difference in the way...
Ultimately not, but it was a sharp reminder that
makes
the dollar
it immaterial.
Is not, the dollar is not a reserve currency now, Lou. Gold is...
It doesn't deserve to be, but it's still. But people are still hoarding it. Look at the Bank of Japan. They bought $50 billion in one day last week, and they're threatening to buy more.
The purchases of dollars right now are
let me bring this down to something, because the people listening to you are fascinated by gold as bullion and investment. Terrific. But what they are really concerned about is the investments they have that just happen to be in dollars because they're citizens living in the United States, guys. Yeah. What is going on? Please.
They got to do something about that.
If you've got an answer as to what the future is going to look like here that'll be helpful.
Bernanke is
Excuse me, Peter. I'm used to finishing sentences on the show from time to time. What can they expect, and what should they do in the midst of this volatility? And let me start with you, Peter.
Well, what I'm trying to say is they need to get rid of their dollars. Ben Bernanke is going to destroy the dollar. That's how he's trying to prop up the economy, by destroying the dollar, by creating inflation. And so if you don't want to be taxed by Bernanke, you've got to get rid of your dollars. You can buy gold and silver. You can buy Swiss francs or other currencies. You can invest abroad. You can invest in some of the Asian economies.
Okay,
your turn.
Okay. Lou, short term, I think we're going to be okay for various reasons. Money supply going, what Bernanke did yesterday. I would hold on.
Which was
right now.
effectively nothing.
Which was effectively nothing, but that 2-year promise means
Yeah, yeah, yeah.
that I can
don't wanna
take out
give
a 2-year variable rate
Right.
mortgage, and
Good.
that's very, very good. You may get some spark in the housing market. Long term, I think you should probably consider, moving to Canada unless our Congress wakes up. We need a serious discussion on growth in this country.
Yeah.
There are a lot of industries that we can create.
Really?
We've got continental resources out there in the back of shale.
I'm going to end it there because
I
you finally
agree with
agreed
Stephen Lee.
I totally agree.
You both agree with me then.
I totally agree.
I'm happy.
We need a serious discussion on growth.
Steve,
I don't agree with how Peter wants it to happen.
Come on, guys. I just got you to agree.
We
Now
need
you're
more
going
growth,
off on
but
your
we
own
don't.
again.
But
Gentlemen,
we
are.
go 90%.
I've got to say thank you.
We don't want to stimulate housing.
Peter Schiff, thanks for being with Stephen Lee. You guys are a handful. Thanks so much. Still ahead, the A-team. The union's losing big again in Wisconsin. We'll be talking with the state Senate Majority Leader about a very important victory, not just in Wisconsin,